Trading Market Technicals morning call video for Thursday, September 19th. Big move in the indexes on Ben Bernanke's comment stating there is no tapering. Wow, unbelievable. Shocking the markets yet again. Starting back from May when he said, speaking hawkish about tapering soon. Then that June comment comes in stating a more dovish tone. And then now stating again that there is no tapering. And my guess is the reason why he's doing that is because he wants to exit without any issues or problems in the markets. And I just think that that is totally insane that he did not taper and slowly, at least slowly, move back into tapering back his asset purchase program. But the markets are totally on full greed mode. We are up right now, even in the pre-market, about 7.5 E-mini handles. The markets are extremely overbought. We can see that right in front of the NYMO right in here. We are outside the Bollinger Bands, running at 84%. So you have to use extreme caution, guys. Now, remember, news like this is fueled by greed and we can move much higher because we're overbought. That does not mean we want to sell the market here. And if you are selling the market, you are losing lots of money. You need to pick your spots. The risk is definitely to the downside, guys. Keep that in mind. We could really move higher. We are at extensions right now in the minis. We got 1720, and we'll probably break higher again yet today. But the next couple of days is really going to set the tone. Is it, in fact, that we are going to continue to move higher? We've been up now for almost 2 weeks straight. So at one point in time, there are going to be some big money guys looking to take profits. So really, really use caution out there, okay? I would not be chasing stocks. I'd be waiting for pullbacks and then buying the trend, which would be up, and then I would be looking to get into some quality stocks, and that's exactly what I'm going to be doing. Quick run on the numbers. Dow Jones up 147, NASDAQ up 37, almost 38 points, S&P up 20.75, and the Russell up 10. So we have new highs, all-time highs in the S&P, all-time highs in the Dow, and all-time highs in the transports. So you cannot deny that the markets are running on full cylinders. Now, we do have divergence, I mentioned the other day, on our indicators. But again, divergence, you need price. Price is what pays us, so keep that in mind. I'm going to run through some of the indicators, just a couple, and then we'll go right into the chart segment. Really, if you're looking at a 5-minute chart, and I'm not going to bore you with that, but if you look at a 5-minute chart, it's the same thing. Gap up, sideways consolidation. Gap up, sideways consolidation. So if you're long, you're doing great. And if you're day trading, well, obviously either you have to really find quality stocks and then hit them good. Otherwise, you're really not doing much because it's not giving you the risk reward and the opportunity to get in at the right time, identifying your stops, and then moving from there. So, in a nutshell, it will happen. And I still would say that there is going to be weakness in the next 3 to 4 weeks before this market cannot. I personally don't think the markets just don't go straight up between now and the end of the year and have that Santa Claus rally right into it. So I do think that there'll be profit taking. We are at extreme levels here, and as you can see here in NYMO, we are now getting at a point where we are at extreme levels the whole year of 2013. So that tells me use extreme caution, and this is a very reliable indicator. Does it mean that the market's going to roll over today or tomorrow? No. All I'm saying is that if you are long and you're positioned long coming in today, tighten your stops, start taking some profits, because when the market does roll over, people take profits. It's going to be pretty fast and furious, and that's how usually it is. All right, real quick, let's take a look at the VIX. Surprisingly, yes, the VIX had a big engulfing candle, but did not sell off with a big reversal candle. Now, this is an engulfing, yes. However, I do see. I thought the VIX would be somewhere around 12.5, but let's see what happens today. Maybe they break down and we get out of that Bollinger Band, and then this is what I'm going to be looking at for a buy signal in the VIX and a sell signal in equities. Okay, so watch the VIX. Now, CBOE, surprisingly enough, we should be down here if this euphoria of buying stocks is back in business. Look at this. This is really extreme complacency. Well, guess what? We're neutral again. We're in neutral territory again. So there are skepticism out there looking, buying some puts and saying, hey, this just can't go on every day, and it can't. So just use caution. That's exactly what I'm showing you. Dollar got destroyed yesterday. Now, and like I said, I do think there's a dollar strength in the market. Now, This could be a game changer, and that's why we don't just go out looking to buy dollars or sell euro dollars, right? We want to wait for an area so it consolidates, and we want to see reversal breaking a bearish trend. So far, this has not happened all of September. Now, can this be a game changer for the dollar and the dollar continues to break down? Absolutely. Now, do I think that the dollar runs a little bit higher? I still do. I still do. I want to see what happens in the next couple of days. Next week or two is going to be telling for what the dollar does. If the dollar breaks around here, continues to make lower lows, lower highs, then I'm going to have to revisit my analysis and say, okay, well, then I think the dollar starts to creep up. Remember, the relationship is inversely correlated, but if the market does indeed run higher and everything is just great, which we don't have. Remember, the reason why the Fed is not bringing his asset purchase program, and this whole rally since 2009 is fueled by the Fed. The Fed sees something that we don't, that the market has not really truly recovered, and that's why the Fed is still continuing to back this asset purchase program with no tapering. Remember that, guys. That's a fact. So when that does happen, you'll see the dollar rally with equities at one point, but right now it's not because of the tapering progress that they have with the Fed. So the dollar is getting smashed, and that's something that we need to continue to monitor. Okay, now let's take a look at the gold. As you can see here, the GLD. Now this is going to give us a great opportunity to re-enter short. It's only 1 or 2 days. I still like the short side of gold in this area here. Remember, it needs to get up here and fail and then roll over. Not because it touches, I'm looking to short. Okay, these are just areas of interest. Okay, so now we're looking to see, let's see if we can get another day or two of extreme buying and then maybe even get up into this 20 to 200 day moving average and then fail. So I'm going to be looking for a possible gold trade and probably sometime early next week. Okay, same thing with the USO. We're just kind of hovering around here, hanging here. I would have liked to see a little bit more breakdown, but that did not occur because of the Fed. And now the oil is back up. USO is back up here. Again, for me, no trade up in here. I want to see oil break down to these areas here, if at all possible. Or if it's going to break above, it needs to consolidate for a good 3 to 5 days before I look to buy a breakout of that range. So no trade in the USO. EEM, huge move up in the EEM, incredible move up. That's going to, the no tapering effect is going to definitely help precious metals and emerging markets, which of course will indeed help U.S. equity. So you can see here, big move up. And perfect case in point when we said we're going to look to look for an area of interest to short, and maybe this might have been it right up in here. It did not happen. We came with a doji, but again, the doji is indecision. We needed to break the low here. That did not happen, so no sell trigger. And then we were looking for this area here, but we weren't going to get in front of the Fed, so there was no trade here as well. So remember, guys, when you're looking for entries, make sure you realize where your entry points are, and then manage them accordingly. Okay, so now we have another big breakout in the S&P 500. Big move up, all-time highs, and now we need to see what this does. Now we could break out again higher and then roll back down again and take back maybe half this candle and then roll back up again, and then that would be still bullish. So remember, just keep an eye on what happens here in the next couple of days. It will be telling. We are extended, guys. I would not be looking to first of all, I wouldn't be looking to just short the market until we get a signal. Otherwise, buying the market would be, again, buying strength. I would be looking to buy good quality companies that are actually moving higher and buy pullbacks into strength. Okay, here's the 60-minute chart I wanted to show you. As you can see, we broke way out of here. These things will be redone, and we are now at all-time highs again in the 60-minute chart. And again, extended outside of the Bollinger Band. I mean, it's just crazy what's happening here. Total greed, though. This is fueled by greed. So people buying up at these levels, thinking that the markets are going to go much higher. And if the market does roll over, you have to be very careful because a lot of longs are getting trapped up in here. And then the market roll over, you're going to have that fuel just pushing the market slower again. Okay. Spiders, same thing as you know. well. S&P 500 ETF, same thing outside its Bollinger Band here, so a bit extended. However, we did get confirmation with some good volume here, so that's fine. That's a good thing. It's a good sign. So a nice pullback, an orderly pullback would be in order to look to enter the market or add to your long positions. Okay, and here's this little area here of the diamonds. Same thing, all-time highs, took out our recent highs here. So watch this. Now the diamonds is a little bit more interesting. There's two uptrend lines here from dating back from November 2012. This is actually reaching it along with the outside of its Bollinger Band, and again being overbought already. So this is going to be interesting to see if the Dow can actually break out higher again, or if it fails and breaks back in. But again, even if it's a pullback to the 50-day moving average, it's still healthy for the markets. I think the market should be in a process of starting to take some profits and pulling back a little bit. Here's the IWM, same thing, all-time highs, and again, big volume here. So again, guys, the thesis remained the same. We are extended, we're overbought, so use caution, tighten up your longs if you are long, and if you're looking to day trade, look for some good quality stocks and look for them to pull back and enter on pullbacks. Stick with the trend during the day, because that's important. Okay, same thing with the transports. Transports here, all-time highs. So we had 3 all-time highs in 3 indices that we follow. And again, the leader is leading. That's the transports. And then, of course, we have Goldman Sachs. Just taking a look at the banks. Didn't do quite as what we wanted to do, obviously. But again, holding nice. We broke that bearish symmetry. And now we're consolidated, gapped up, consolidated. Now, really need to take out the highs here and really get going. Goldman Sachs can really get going here. Here is the XLF. Excuse me, XLF really moved higher again. Not quite taking out the highs, but getting close here. And here's Apple. Apple actually bounced back up again. And then Apple was up at one point about 10 handles and then started to retreat based on some of the iPhone numbers reports. And I think they weren't as great as they expected. So Apple here still a little bit in trouble. I would not be looking to buy Apple here. I would be waiting to see what Apple does. Now, again, for a trade, you couldn't. I had a lot of guys saying, oh, Apple's in an uptrend right now. We got to buy this area here. I just wasn't so. I had mentioned last week we talked about when every time they report, they always sell off at least 0.59%. And sure enough, that's exactly what happened. Got decimated. So we'll see what happens. Put in a doji today under the 50-day moving average. So we're going to really need to get above this area and start to break higher again. But again, it's going to have some resistance here. I'd like to see this thing back and fill in this area, holding a 446, and then taking out this cluster. And then I would start looking to buy it. But I wouldn't buy it here, only for a day trade. And then lastly is the Qs, as you can see. Qs broke out real high. So technology's doing well. Big cap tech is doing well. So it's really going to be a wait and see, guys. I think today and tomorrow are going to be telling. Do we continue to run up with this uptrend, or do big money start to take profits? And I think that big money are selling into this. We can go a little higher. Markets are up in the pre-market about 7.5 handles. But remember, guys, use caution because right now the risk is definitely to the downside. All right, use your stops, and we'll speak to you tomorrow. Take care. Have a good and safe day today.